Hello everyone and welcome to this YouTube video. This is the first tax series for the 2021 calendar year. Please stick around, do subscribe if you want to learn more about rental income and the tax consequences of that. My name is Andre Bortma and on YouTube I give tax lectures and teach people how to use SARS e-filing. So the first thing to note is that rental income it's when you have investment property that is specifically owned by either an individual, or it could be a trust, or it could be a company, and it's about residential letting. So it could be a long-term rental where you have rental contracts, or it can be for short-term rentals where you either have a bed and breakfast, you maybe run a guest house, maybe have a holiday home, or what's obviously very popular these days is Airbnb. And so those are all types of rental income that you can earn. The big difference between long-term rental and short-term rental is not so much on the income tax side, but on the VAT side. If you are doing short-term rentals that's not contract-based, often you need to register for VAT once you go over R1 million of turnover. So just keep that in mind, okay? I'm going to refer to this often. It's called the income tax framework, very important. When you get rental income, it will go into your gross income, and then there's not really rental income exemptions, but there are deductions that applies to rental income trades that you can take advantage of, and then obviously there might be capital gains if you do sell a property. Either it might be a gain or it might be a loss, depending on whether you actually made a good deal on your property. So the big tax tip here is you can reduce your tax by taking advantage of the rental deductions that's available to you. So common deductions that people can take advantage of when they have rental properties is they can claim a lot of expenses. I'm talking about admin costs, bank charges, cleaning and the upkeep of the property, gardening around the property to maintain the garden, insurance, so property insurance, the bond interest, so interest on the bond can be deducted, levies, rates and taxes, also Airbnb related expenses. So there might be DSTV that you've plugged in, there might be internet that you've installed at the Airbnb place, those can all be deducted. Repairs and maintenance is a big one. I'm going to do a video about the difference between repairs and maintenance and improvements, because this is very important when it comes to property. Okay, then there could be agency fees that you can deduct if you have an agency running the rental property for you, or management fees. Maybe your wife manages the property for you, or you have a brother that helps you out and you pay them a fee, then you can deduct the management fee, and also security. Now, an interesting thing about rental income is that it's a special trade. It's really considered an investment income throughout the Income Tax Act. However, it is a trade, and what that means is any expenses that's in the production of income can be allowed because it's a trade. But it's very important when it comes to why it's an investment income. For example, if you're married in community of property, the rental profits are split 50-50, because in community of property the property is owned 50-50 between the husband and wife. Also for turnover tax, rental income does not fall under the turnover tax definition, and that falls outside of that. So that makes rental income a very interesting trade, because it's got that dual nature of being both an investment as seen as passive income, but it's also a trade which can be actively run, and you can take advantage of all those deductions that's there for you. Okay, so what we're now going to look at is just a basic rental income calculation. So person A might have received 120,000 Rand in rental income, so 10 grand a month, had rental expenses of totals about 104,000. So over the year it was 500 Rand bank charges, insurance of 2,000, interest of 80,000, rates and levies, repairs and maintenance, and some security, and that leaves a rental profit of about 16,000 Rand. It's very important, rental income will be added, so that rental profit of 16,000 will be added to person A's taxable income, and they will be taxed on that. But obviously, because it's not forming part of your employment income, pay as you earn is not going to cover the rental income. So you have to pay the tax on that rental profit that person A made. Just this last point, rental income is a great option for additional income, wealth building, and risk diversification. So if you are heavily invested in shares, you might want to add rental property within that asset mix. However, many people don't plan for the additional tax that they need to pay on rental profits. I often say that rental income can be a tax trap, because often when you have rental income and you're making rental profits, a lot of people don't anticipate that they are going to need to pay tax on the rental profits, and then they are surprised by it. So the big thing, if you have a rental property, it's very important to make a tax provision for it. Okay? Even if you are not strictly a provisional taxpayer, my rule of thumb is if you have any income that does not form part of your employment income and covered by pay as you earn, you must put aside about 10 to 20% of that income aside for taxes. Okay? So that is the basics of rental income. We have covered the types of rental income that a person can earn. We have covered the basic deductions that's available to you. We've done a basic rental income calculation, and then some general advice. I hope that was helpful, and I'll see you in rental income part 2, where I talk about the tax consequences of rental income.